we are covering the fundamentals of group health insurance, a major topic on your health insurance licensing exam. The exam will test your knowledge of how employer-sponsored coverage is structured. A key concept is the difference between the master contract and the certificate of insurance. The employer, as the policyholder, receives the master contract, which is the actual policy. Each insured employee receives a certificate of insurance as proof of coverage. Outlining their benefits. A common exam question will present a scenario and ask who holds the master policy. The answer is always the employer or the sponsoring group, not the individual employee. Eligibility for group health insurance is another critical area. Typically, an employee must be actively working and full-time. The exam will often test you on waiting periods, which are initial periods an employee must work before becoming eligible for coverage. For example, a new hire might have a 30 or 60-day waiting period before they can enroll. Remember that waiting periods for pre-existing conditions are generally prohibited under current law. You will also be tested on the difference between contributory and non-contributory plans. In a contributory plan, the employee pays a portion of the premium. Insurers require a high participation percentage, typically 75% of eligible employees, to avoid adverse selection, where only high-risk individuals enroll. In a non-contributory plan, the employer pays the entire premium. For these plans, insurers require 100% participation of eligible employees, which further protects against adverse selection. A frequent exam trap is to confuse these participation percentages. Here's a simple way to remember it. If the employee contributes, it's 75%. If the employer pays all, it's 100%. Think. If it's free, for me, everyone's in at 100%. Open enrollment is the annual period when employees can enroll in or make changes to their health coverage without needing a qualifying life event. The exam will expect you to know that outside of this period, enrollment is generally not allowed unless there is a qualifying event like marriage or the birth of a child. Finally, for large groups, insurers often use experience rating to determine premiums. This means the insurer bases the premium on that specific group's past claims experience. A group with a healthier claims history will likely have lower premiums. This is different from community rating, where premiums are based on the average costs of a larger geographic area or community, spreading the risk across a wider population. The exam might ask you to identify the rating method used for a large company with a detailed claims history. And the answer would be experience rating. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.